Think of a Payrolls Friday where we've barely talked about Payrolls Friday because everyone wants to talk to me about trade. So where do you want to start? I think we should just start with the headline. It's the trade story. So many people, Larry, are trying to figure out the minimum condition of success for the following month to avoid this September 1st tariff increase. Have we got any idea what that is, Larry?
Well, I don't want to speculate on that. Look, in some sense, the story is very straightforward. Our team returned from Shanghai. Ambassador Lighthizer, Secretary Mnuchin. We all met with the president yesterday, talked about it. The president himself is not satisfied with the progress of the talks with respect to agriculture, with respect to structural items. Even he's still concerned about the outlawing the sale of fentanyl in China. So he did tweet and put on tariffs of 10%. That'll come on the $300 billion remaining balance September 1. But look, Jonathan, it was a very respectful tweet. It was a very matter-of-fact tweet. And he clarified some of that or added to some of that yesterday when he had his press gaggle and said, really, the issue of tariffs and the relationship depends on the progress or the lack of progress for a trade deal between the two great countries.
So, Larry,
it was a respectful letter, and it's a constructive letter. And, you know, we believe the president expects and our team expects to be meeting with the China team in early September.
Can we assume, though, that if the Chinese begin buying agricultural products between now and September, we can avoid that tariff increase? Would that be sufficient?
I wouldn't want to speculate, you know, can avoid and so forth. I would say from our talks internally that would be a plus. That would be a very good plus if they start buying agriculture products in size. It would certainly help the story.
At the moment, the president followed that tweet up with some more aggressive language, Larry, I think you'd say. Until such time that there is a deal, we will be taxing the hell out of China. Larry, how do you expect the Chinese to respond to that language?
Well, we will see. I don't want to speculate on that. There's some things coming out of Beijing today, and we will be evaluating these statements. I don't want to get ahead of the story at all. We'll see a day at a time. But again, there's certainly a month here before the tariffs go into place. A lot of things can happen in a month. A lot of good things can happen in a month. So let's just see what happens. I don't like to predict or speculate on any of this.
Well, Larry, I appreciate that, but just to understand the premise of that statement, we will be taxing the hell out of China. If these tweets become policy on September 1st, taxes will be going up on U.S. consumers as well, won't they?
Well, look, the consumer issue, you know, we've been down this road discussing it with respect to prior tariffs. You know, our view is any impact on U.S. consumers is de minimis and minuscule. And we have models to show that. You know, look, probably the strongest aspect of the American economy today, including this jobs report, is precisely consumer spending and consumer income. And that includes real income because there's no inflation. We think the economic burden of these tariffs has fallen most heavily on China. They've had to slash prices in order to offset tariffs. That's damaged their profitability and their growth. There's a lot of movement of production and related supply chains out of China and going elsewhere. And so I really think that in terms of the American story, our economy is quite strong.
Yeah.
And unfortunately, in terms of the China story, I think their economy is quite weak.
So, Larry, relatively speaking, I think most people would agree with that. But let's talk about some of those models. You've modeled this impact of an extra 10% on this $300 billion. That's been modeled internally. Can you share with us some of those findings that you've actually found?
I'm going to talk to our team and see if we want to put any of that out. We have not yet. We may. I'll get back to you on that.
OK, well, I'd love to talk to you about it because a lot of people are confused by it. Most people assume that if you put that tariff up to 10% on September 1st, there's going to be some real pass-through to the consumer because these are the retail items that haven't been touched so far. So are you saying that won't happen come September? Prices won't go up on everyday items for consumers because of this tariff?
Well, I'm speaking in the aggregate, Jonathan. But again, our experience and our modeling suggests that any consumer impact be very, very small, and that the biggest burden in economic terms is falling on China. And I think the Chinese economy is in rather poor shape. I don't want the Chinese economy to be in bad shape. I'm just saying that's what's happened. Our economy is very strong. Their economy is very weak. They're losing market share. They're losing production. And they're probably not going to get that back. People are going elsewhere. Some people are coming back home to the United States. We welcome that with our very low corporate tax rates and our deregulation program and our easy access to energy and so forth. So I think it's a plus. But look, without forecasting, we expect to meet with the Chinese in September, and some good things may well come from that meeting. That is possible.
At the moment, though, Larry, that manufacturing story abroad is starting to come into the United States. You see it in the ISMs. I'm not saying we're in contraction territory here in the United States, but you're starting to see them roll over. Are you not worried about that the weakness that's been triggered abroad from this trade story is starting to bleed into the U.S. economy? There's real signs of it, Larry.
I don't deny that. I mean, the United States is not immune from the world economy. Maybe we can talk some about problems and policy mistakes in overseas. I am, however, heartened. By the way, new orders in that ISM were up nicely, so that's a good sign. Manufacturing itself in the industrial production report, as you may know, is up nicely in May and June. And durable goods, particularly so-called core CapEx durable goods, had a big increase in June after a decent increase in May. So we're looking for a comeback there. I mean, a lot of these issues, and I don't deny the hard goods sector has been slower. It's the consumer sector that's really dominating. But, we have unfortunately faced 2 years of severe monetary restraint. Now, hopefully that period of monetary restraint is coming to an end. And I note that the money and bond markets are predicting several more rate cuts from our central bank. So that's going to help the story. But we still have strong incentives in place to produce and work and invest. And I think that our economy is going to have a very strong second half.
But, Larry, let's be clear here. The reason that Fed Fund futures start to really price in a rate cut in September was after that tweet. It's the belief that this trade story is going to do some real damage to the U.S. economy. And that's what I'm struggling to get my head around. Going into 2020, we're going into campaign season now. I'd love to know what the message is from the party to the U.S. consumer and anyone working in manufacturing that we're going to push this. We're going to tax the how, so to say, out of China until they break and give us a deal. How far are you willing to go with this?
Well, Jonathan, I just want to note in today's jobs report, not only 164,000, which is a solid number, households, which is the small business number, household employment was up 283,000. Here's one very important number. Civilian labor force up 370,000. Last month it was up 335,000. People are coming out of the woodwork to come back to work because of better job opportunities, better job training opportunities, and higher wages. That's so important. And we just got, and this is so important to the story of the strength of the U.S., the wage and salary numbers revised up across the board. The last 12 months, wages and salaries rising at 5.1% with, I beg your pardon, 5.5% with an above 8% saving rate, which is absolutely phenomenal. And the biggest gainers in all of this are the low end, the middle and low end people, the blue collar workers and so forth. In fact, the bottom 10% is the biggest gainer. Some of our critics on the other side might want to check those facts to improve their own analysis. So I think we're in very, very good shape here at home.
Larry, looking at the equity market, it's not in good shape over the last couple of days. Granted, it's been a fantastic year for U.S. equities, but there's some real weaknesses that has emerged in the last 24 hours. The president said to reporters yesterday he wasn't concerned at all about the negative reaction from markets. I expected that a little bit because people don't understand quite yet what's happened. Is this a change of stance from the White House? There used to be a real concern about equity markets. Have we pivoted?
Well, no, Jonathan, I'll go back to what you said 2 sentences ago. We've had a heck of a year. The indexes are up more or less 20%. And I think that is, by the way, foreshadowing a very strong economic growth period for the rest of 2019 and on into 2020. It's been a fabulous stock market. And by the by, encouragingly to me at least, in terms of the key sectors in the stock market, The hard goods sectors, the industrial sector, transports have had a terrific comeback. I noticed chips and semiconductors too. That tells me that any pause in the economy in hard goods last year, undoubtedly related to the monetary tightening from the Fed, that pause may be coming to an end. And that's why I'm pretty darn optimistic when I look at today's job numbers and I see all these literally hundreds of thousands of people returning to the labor force. I say something very good is cooking out there.
Well, Larry, let's just follow up on that question, though. I asked you, the president said that he's not concerned about the negative reaction from markets. Is that a change in stance from the White House?
No, as I understood it, he was just referring to the overnight immediate response. A day or two in the stock market doesn't make a trend, for heaven's sakes.
Well, let's have a final question on the foreign exchange market, shall we? Last week was really confusing for me, confusing for many others as well. You ruled out any FX intervention. Then the president said, I didn't say I'm not going to do something. Just what is the policy right now?
Look, in brief, I mean, I have the president's quotes here. He did say, I wouldn't say I'm not going to do something now, but he said, look, having a strong dollar, there's a reason it's so good. Having a strong dollar is having a strong dollar. Having a strong currency shows what an amazing country. I stand by those remarks. I thank him for making them. We have ruled out any currency intervention. I mean, the problem here, and this president has said many times, it's not that our dollar is strong and reliable and dependable. We love that. Money is coming in here from all over the world. We are the hottest economy. We're the only real major country with solid growth and investment returns. The problem here is that the president's concerned, correctly in my view, that other countries may be manipulating their currencies, perhaps to get some short-term trade advantage. We don't like that. We want a level playing field. And the G20 arrangements have always called for currency stability, as Secretary Mnuchin would attest. That's the issue. We worry more about what the others are doing. We're perfectly happy to have the U.S. dollar as the center of the world's economy. We are the world's reserve currency, and we aim to keep it that way.
With that in mind, Larry, when can we expect you to assign these countries as currency manipulators? The Treasury Secretary has a watch list. Where's the final list of currency manipulators? When do we get it?
Well, Secretary Mnuchin has expanded his watch list. That is a Treasury function. I'm going to leave it to him. He's covering it very well. He's a very smart guy and a great leader over at Treasury. So we will follow that story as it unfolds.